Welcome back to The Explainer. Today, we're diving into an absolutely incredible corporate comeback story. We're looking at Mativ. They're a massive player in the specialty materials and manufacturing sector, and in 2025, they were staring down some serious macroeconomic headwinds. But they managed to engineer a turnaround that honestly reads like a masterclass in strategic execution. We're going to break down exactly how they pulled this off, looking right at their own financial reports and market data.
37%. Just let that sink in for a second. That is the massive explosion we saw in Mativ stock. Now, you might be wondering, why should you care about this? Well, in a business landscape that's just full of uncertainty right now, figuring out how a company actually pivots from struggling to surging is incredibly valuable. This isn't just a line on a chart going up. We're looking at the anatomy of a highly disciplined pivot. When capital gets expensive and demand softens, most companies just hunker down and kind of hope for the best. Not Mativ. They went straight on the offensive.
And the crazy part? This wasn't just some lucky one-time fluke or a seasonal bump heavily reliant on slashing headcount. No, this was a sustained operational victory. Fast forward to Q2 2026, Mativ actually topped their forecasts, and we saw shares jump another 9.2%. The broader market clearly realized that the foundational changes they made back in 2025 were actually sticking. They literally embedded deep operational efficiency right into their DNA. So how exactly did they pull off this sustained turnaround?
Well, let's get into it. Section 1. Navigating the 2025 headwinds.
To really appreciate this comeback, we actually need to rewind the clock back to early 2025. When the new leadership team stepped in early in the year, they inherited a really tricky, complex situation. Now, they saw the potential. They saw the absolute dedication of their team, immense technical capabilities, and some incredibly strong purpose-built assets. But they also realized right out of the gate that they needed urgent, decisive action. The specialty materials sector was facing a reckoning, and they simply had to move faster to stay ahead.
Their annual report actually calls out a brutal combination of environmental factors they had to navigate just to keep their heads above water. We're talking about really challenging industrial demand caused by severe supply chain bottlenecks, plus highly uncertain macroeconomic policy where interest rate pressures were making capital incredibly expensive. And if that wasn't enough, toss in volatile trade policies and a totally unpredictable geopolitical landscape messing with global shipping routes. Literally any one of these is tough to deal with, but all of them at once, it created a perfect storm that genuinely threatened their long-term stability if they didn't act fast.
Which brings us to Section 2, the three-part playbook.
So the executive team didn't just throw things at the wall to see what would stick. They designed a very specific, rigorous roadmap to rebuild the company from the ground up, and it focused on three critical priorities. First up, driving enhanced commercial execution. Second, deleveraging the balance sheet. And third, doing a comprehensive strategic review of their entire portfolio. This holistic approach was literally the blueprint that saved their year. It was way beyond a Band-Aid fix. They were fundamentally restructuring the business. So let's break these down one by one.
But real quick, let's ground this in reality because it's super easy to get lost in all the corporate financial jargon. Mativ isn't just a spreadsheet. They make actual, highly engineered, physical products that connect, protect, and purify things in our world. We're talking everything from massive data center racks to advanced filtration spools. In these end markets, they're high growth. Global demand for data center infrastructure and advanced filtration is absolutely skyrocketing right now. What this means is their underlying physical assets were already incredibly strong. Their problem was execution, not the product itself. These purpose-built assets are what ultimately fueled the whole turnaround.
All right, going back to step 1 of that playbook, commercial execution. The old siloed way they were operating just was not working. They had competing sales teams and fragmented strategies that were just leaving money on the table. So they fundamentally transformed this by setting up a uniform commercial leadership structure across all their segments. This broke down all those internal walls and, like the CEO pointed out, it finally unlocked the full power of their portfolio. Dedicated sales teams started using targeted cross-selling, finding new complementary solutions for their customers' unmet needs, and enhancing their pricing efforts to outpace those rising raw material costs.
Okay, step 2 was deleveraging the balance sheet. They announced and actually delivered on a multi-quarter program to drastically reduce their cost structure. They aggressively optimized their working capital and right-sized inventory levels across the board. And let me tell you, this required some incredibly tough calls. Things like deliberately pausing non-essential maintenance and even postponing some high-return capital projects. In a normal growth environment, you would never do that. But when you're in survival mode, preserving cash flow is literally the only thing that matters. And these aggressive moves actually paid off, leading to a really meaningful reduction in their leverage.
Then step 3 was the comprehensive strategic portfolio review. They took a very rigorous, objective look at absolutely every asset to see if it actually supported long-term shareholder value. Basically, the deadweight had to go. They closed an underperforming facility, they optimized their warehousing footprints, and they ruthlessly rationalized their SKUs to wipe out manufacturing complexity. In manufacturing, fewer product variations means fewer machine changeovers, which drastically lowers inventory costs and ultimately gives you much higher margins. At the exact same time, they hyper-focused their R&D investments exclusively on near-term accretive projects so they could guarantee quick returns on their capital.
Moving right along to Section 3, a leaner, faster Mativ.
So let's look at the final impact of all these aggressive strategies. Look, turnarounds are almost never perfectly smooth, and Mativ was no exception. Their SEC filings show they had to maintain some incredible resilience. They successfully reduced leverage and improved capacity even while dealing with a major operational disruption at one of their facilities in Wisconsin. Absorbing that kind of localized shock, which honestly in previous years probably would have derailed their entire quarter, and still delivering on their overarching financial targets, that proves that this newly established operational foundation they built is rock solid.
In a recent letter to stockholders, the CEO summed it up pretty perfectly. They noted that as they look ahead, their foundation is stronger and their path forward is clearer. By leaning into these really uncomfortable changes, they managed to streamline the whole organization for faster decision-making, and they completely revitalized their innovation pipeline. But maybe the most important thing? They fostered a relentless culture of achievement. That cultural shift, getting the entire workforce fully aligned on efficiency and execution, is honestly just as crucial as the financial reengineering itself. Which brings us to our final takeaway. Mativ survived some truly unprecedented macroeconomic headwinds. They completely rebuilt their operational foundation from the inside out, and they deeply rewarded their shareholders along the way. They proved that with disciplined leadership and a real willingness to make the hard choices, even massive external pressures can be beaten. So with this leaner, faster organization and a totally transformational mindset firmly in place going into the new year, what industry will they disrupt next? Thanks so much for joining me on this explainer. I hope this deep dive helps you view the next big corporate turnaround with a much sharper lens. Catch you next time.